Welcome to Tradespoon. My name is Vlad Karpel. I'm CEO and founder of Tradespoon. And today we're going to have a live trading room, not live our trading room, but our weekly strategy roundtable discussion. I'm on the wrong webinar. Weekly strategy roundtable discussion where we talk about current market conditions. Let's talk about elections, Fed decision, right? These are the main events of this week that can influence the market short term and long term. So what to expect short term, what to expect long term, and look at the Tradespoon signals, how to use these signals, and how to manage your portfolio. For those of you who are new, welcome. If this is your first live event, do me a favor, type in first. Always want to welcome new subscribers. Bob, welcome back. Glad you were able to join. The difference between Tradespoon and maybe some of the other services out there is that my background is technology, right? I'm not a market maker or a trader like a lot of the other services are. My background is technology. I had to learn how to trade, to build several startups here in Chicago in hedge funds and a trading community, so I had to learn it. And then when the companies went public, I decided, well, I'm going to manage my own money using the technology, using some of the skills I learned, and I was able to build a system, build a team of financial engineers that are really good in using latest advances in artificial intelligence modeling, neural networks, to learn on the data and make inference engine that can make predictions and generate signals in the market. And then we use these signals to actually trade in a live trading room, right? Between Keith and I, we have morning session and a closing session. And between two of us, we probably have over 50 years of experience. So this is, I think, unique proposition that we offer. Disclosures are very important. Please read them. If this is the first time you see these disclosures, I encourage you to visit optionscreening.com so you can understand the risk associated with trading stock or options. I'm not a financial advisor. I'm not registered with FINRA nor SEC. I'm showing you what I do in my own account based on my own risk tolerance level for general education information purposes only. Please consult your financial advisor prior to making any trading decisions. Also, it should not be assumed that the future picks will be profitable or equal past performance. And you can see the relationship between Tradespoon and trading block on the bottom of your screen. All right, so before we jump into a trading plan and portfolio construction, let's look at the market conditions. Where is my screen? All right. All right, so spiders continues to go higher. We're already at 600, right? So spiders continues to go higher. After the elections, right, we had a strong rebound and the follow through. So it looks like the breakout is confirmed. In terms of next levels, let's look at the Tradespoon, what the model says. So finally turned positive, right? It makes sense because we had a breakout, we confirmed the breakout, and now the model says, okay, the path of least resistance is higher highs and higher lows, right? I mean, I don't think we're going to get to 630 by end of November or end of the year, but 610, 620 is not out of the realm of possibilities. I mean, earnings behind us, elections behind us, interest rate decision behind us. We are entering bullish time of the year, so I think the path to the resistance is higher highs, higher lows, and you buy on non-pullbacks because from seasonality point of view, now that the unknowns are out of the equation, from seasonality point, what happened to seasonality? Oh, that's wrong. Okay, but probably I have to fix it. But from seasonality point of view, market continues to go higher, right? It does continue to go higher. In the month of December, right? So November, December is usually a bullish time of the year. You have a confirmation of a breakout. QQQ also broke out, right, from all-time highs. 2 days in a row, it's trading above that level. That's bullish. Small caps broke out. So you have a widening of the rally in participation. That's a clean breakout, close to all-time highs, if not at all-time highs. I think it's retesting. Yeah, it's right at the all-time 2021 all-time highs. 2021 all-time high. So you have a broadening of participation. You have originally interest rates rally significantly, right? Originally, interest rate, jumped to 450 after the elections, right? That was kind of a head scratcher because, if the Fed is cutting rates, why are the rates going up? One explanation was, well, Trump administration will impose tariffs. Tariffs are, inflationary, right? Prices will continue to go higher. And initial reaction was to continue to go higher. After the Fed said, well, we don't know when, and we don't know the magnitude of the tariffs, we don't know when they're going to be imposed, against who they're going to impose. So business as usual, we'll continue to cutting rates, and you see a sharp pullback, right? As soon as that happened, or even going into that event, people kind of anticipated, right? That's what we talked about before. Interest rally to 4.5 into the elections, and then after elections and after the Fed decision, they're back below 4.3, which was, I think, is an important line in the sand, right? As long as we're below this 4.3, which is October 22 high, and was a support resistance for many levels, it's a sign of relief for the bulls, right? Because as long as we're at 4.5 or higher, then then we're talking about inflation again, right? And right now the consensus soft landing, and inflation is going in the right direction. So now we're back below 4.3, so bulls can, breathe a sign of relief on above average volume, very strong volume in TLT. So, interest rates are down, that's good. Dollar also stable pullback, that's also positive. LQD is rebounding, right? High grade bonds, junk bonds, rebounding, that's all of that is good. VIX dropped below, right? We had sharp pullback. Now that uncertainty is behind us, you have a sharp pullback in VIX, that's positive. And value stocks continue to grind higher, made new highs, another breakout, QQQ breakout, spiders breakout. So for now, we are continuing to go higher. Silver is down. It rebounded yesterday, but still pretty bearish price pattern. Post breakout are usually bearish. So I'm watching silver. I do have a silver position. It's a stock, so I have time. I still think it's in positive trend, but obviously this is not a good price pattern. And we could drop to 26. So for now, I'm waiting for silver. What else is interesting? Metals and miners pullback. We have copper pullback, right? Sharp pullback in copper. China, right? A lot of it, this trade is related to China, right? China up 5%, down 5%. Everybody's thinking about, I do have seasonality here. It's pretty cool. 24, 20. More seasons. Oh, that's pretty cool. Okay. Wow, these guys releasing a lot of option tools. That's good. Okay, so China is down 5%, right? With the idea that still uncertainty about the tariffs and how much the tariffs Trump administration will impose on the state of the economy in China has been pretty volatile. People are trying to put their bets, right? One day is up, one day is down. That's why usually you want to wait 2 to 3 days, because otherwise it's just a noise. And from pattern-wise, nothing has changed, right? You had a strong rally, pullback, multi-month consolidation, and we're still in the same boat. Bitcoin breaking out, right? It broke out, confirmed the breakout. We're at all-time high, above 74,000. So that's another very bullish sign for the market. Crude oil has been weak. That's about it. So usually I do always want to ask that question, right? In terms of spiders, where are we going, right? I mean, once let's look at the different positioning. We cleared the positioning actually in spiders. So let's remove this. So let's just do monthly. So November expiration and December expiration. This shows us open interest, right? Positioning of users, right? Who's buying which strikes. And usually if you have a large positioning level, like next level is 600. That means right now you have overhead resistance 600. Before it was 590, right? And we cleared the 590 level after the elections. So now that we clear 590, 594, next level is 600, right? So it's going to spend at least some time at 600 until next positive catalyst, right? But based on estimated move, you know, end of the year somewhere between 605 and 615, right? So if we see 610, 615 print by the end of the year, I would not be surprised. Let's zoom out, more strikes. Yeah, so looks like people are heavily selling 610, 615. So first, the highest position is 600. So bulls do have to clear the 600 level, right? That's where we are basically right now. And assuming that we clear 600 level, you know, next is 6.5, then 6.20, and 6.15. So end of the year, I think one scenario, we're at 6.15, right? One scenario, we're at 6.15. That's one standard deviation move. The other scenario, we're at 580, one standard deviation move, right? If you have negative and positive surprise, you can have two standard deviation. But you know that 70% of the time we'll be trading between 580 and 615. Right? So those are the three scenarios, right? One scenario, we're going to close the end of the year at 615. The other scenario, we're going to reach, you know, so that's scenario number one. Not reach, but, you know, gravitate towards 615. The other scenario, we gravitate toward 580, 50-day moving average, right? That's scenario number two. And obviously, scenario number three, something happens, maybe inflation, recession. You know, 565 has been a very strong support. We held that level. So that's scenario number three. Two standard deviation to the downside. Obviously, scenario number four, we are two standard deviation to the upside. Right, 630. So how many of you say one? We will at least touch 615 by end of the year. Scenario number two, no, we're not going to touch 615, or we're going to touch 615, but we'll gravitate toward 570, 580. Scenario number two. Scenario number three, no recession is here. Once the dust settles down, you know, red wave, there's no checks and balances. There'll be a lot of tariffs and a lot of inflationary pressures, and we're going, you know, two standard deviation down. So that's scenario number three. And scenario number four, no, you know, the gates are open, and, you know, Trump is going to lower the corporate taxes. He's going to stop the war in Ukraine. He's going to stop the war in Middle East, and you know, we're going to live happily ever after. So that's scenario number four. How many of you say one, two, three, or four? Yeah, seasonality chart. I do have to fix it. Sorry about that. Just I just realized. Mark, any option? Tesla continues to go higher. Let's see. Let me. So, well, first let's answer the question. So 2, 1. So we have a lot of twos. Wow, we have a lot of twos today. Andre 2, 2, 2, 3. Some people say Peter 3. Okay, all right. So we have twos. We have mostly people said 2. Basically, we're gonna. This is a false. Basically saying this is a false breakout, right? And we're gonna reach 2. That's majority of the people. We have some 3s and some 1s. I'm gonna go with 1. I think this is a breakout is confirmed, and because of seasonality, right? Mainly because of the seasonality, I think this is very bullish time of the year, and we're going to continue going higher. Any questions so far? Sorry about that. Okay. All right. And then the other one is probability calculator. Okay, good. So you can have probability calculator, right? It shows you 585, one standard deviation, 606, one standard deviation, but two standard deviation could be, I mean, 660 is probably not right, but 630, right? 630 or 530 on the downside. 530 is also too much, but 570, I think 570 to 630 makes more sense. All right, any questions? Okay, so I'm gonna go with one. Any opinion on retail stock? Which one are expected to do better? So let's look at XRT in general, retail stocks. So big jump in retail stocks. Abercrombie and Fitch, let's see, are they still in bullish uptrend? No, actually sold off. Let's see, Costco had earnings. I mean, a lot of them have earnings. I mean, I don't know if Costco is the retail store or specialty store. I mean, this is, you have more like Costco's of the world and Walmart of the world, right? They're going higher. And then you have specialty retail like holding, which is kind of strong. I haven't seen a lot of signals in retail in our VFC. Usually has been a strong signal. So apparel, footwear, VFC had a strong earnings. I haven't seen many. I mean, we still have Macy's and Kohl's gonna start announcing earnings. I would probably stay away from these, but Costco looks strong to me. VFC looks strong to me. Let's see, main retail stocks. Well, Amazon, I think Amazon, if you consider Amazon retail, I would use that. I do like TJX. Let's see, how's TJX doing? Haven't seen signals. It's still underperforming, but a lot of retailers will announce earnings, right? I mean, I think right now, consumers are spending money and bullish time of the year, so I think we'll have a bullish reaction to some of these earnings. Tesla, did Tesla break 300? Because I'm actually out of that trade. Yeah, it broke through 300, another 6% up. So, okay, so this is a good segue into some of the tools we offer at Tradespoon, right? One is the Stock Forecast Toolbox. We've seen it gives you 10-day prediction. You can also zoom out. What about 6 months prediction? Still uptrend, but smaller, right? Magnitude was smaller. I mean, we decisively broke through 583, right? We're at 600. So model will adjust after the November expiration, right? So that means that, instead of reaching 614 in March, we could be reaching 614 much earlier, right? Because of this additional momentum, right? And the data gets updated on the first of each month, right? So in terms of magnitude, right, vector, how far it can go, and the direction is still positive, right? The uptrend hasn't been broken. So that's stocks. What else? You can look at the company screener, right? If you want to see which sectors are leading the market, then you can see, some of the conglomerates, industrials are in strong uptrend. Some of the semiconductors like NVIDIA continues to break out, making new highs. Financial services, JP Morgan's of the world. We had signal today, I believe, in Morgan Stanley. Yeah, Morgan Stanley is in strong uptrend, and you can actually see these signals. So you have sectors that are leading the market under Stock Forecast Toolbox. And then you have Active Trader that gets updated every day. This gets updated once a month because these are long-term trends. These are short-term trends, right? Today, model sees Morgan Stanley is an uptrend, right? Capital One Financial, Fortinet. So some of the stronger stocks that you can see are in strong uptrend. Right, let's look at Fortinet. Yeah, Fortinet. Strong performance, another up 8%. That's impressive that the model actually picked up. Is the earnings today or Thursday after the close? Okay. So Fortinet, Fortinet was the other one. Fortinet and COF, right? Capital One Financial. So all of these are strong stocks, and you can find them in Active Trader under the models. You can find these are short-term signal, right? It gives you suggested entry. If you want to trade Morgan Stanley, you either wait, you enter suggestions are entered at the previous close or at our predicted low. I don't know, 128.44. That Morgan Stanley traded 128.44 today. It did, right? So if you bought at 128.84, right? Usually I wait 15 minutes, right? You wait, you wait 5, 10, 15 minutes, right? And you're here, right? And you enter at 128.84, right? And now you could be out at 129.67. So that's the way you would trade some of these signals, right? 128.44, and you're out at 129. And again, I would use dollar cost average, right? Entry 1, entry 2. And the idea that you want to be down, especially for short-term trading, only less than 1% of your portfolio, right? Here it's 1% stop loss, 127.04, 125, 1% stop loss, and also not to risk 1% of your portfolio, right? We basically say if you hold in position overnight, 2.5% maximum loss. If you're doing day trading, short-term trading, split the trade into 2 and only risk 1% of your portfolio. So if you have an account with $10,000, you risk $100, right? So positioning and position size is the most important, right? Trading psychology, right? Going back to trading psychology, it's important, and position size is important. That's why I propose if you're new to trading or you're new to our services, you start with 4 positions at a time. You're risking 2.5% in case there is a reversal, or some of you said 2, right? Most people said 2 actually, that this is a false breakout. Well, then if you do have that 5% pullback or 10% pullback, you want to know what your maximum exposure is, and position size is important. And a lot of people ask, well, should I always do 1 contract? Should I always do 5 contracts? The answer is no. You shouldn't do fixed amount. You should not do you basically look at how much risk you're willing to do, right? So if you're concerned that we're going to break 1 standard deviation, then you basically say, well, if spiders drop by 20 points from 600 to 580, right, which is roughly 4 to 5%, I want to be down less than 2.5% of my portfolio. Or if you're conservative like me, you just say, well, I don't want to be down more than 1% of my portfolio. Right, 580 is aggressive, right? That's 1 standard deviation. There's a lot of support at 590, right? So you might say, okay, if 590, if we reach 590, because there is a lot of open interest in gamma at 590, then I'm out based on your time horizon. But that's what determines how much money you're willing to invest and risk, right? That determines the size of the position. That is the #1 goal for any trader, to make sure you can determine that. And it's different for everybody because we all have different background. We're managing different portfolio. We have different goals. But in general, consensus is, day trading, it should be, less than 1%. Some people say 0.5%, 75 basis points. If you carry position overnight, it's 2, on average, it could be 2, 2.5, 3. But same thing, you want to divide it by 2, right? You want to look at the worst case scenario and make a decision. Mark Tesla to Bob Donahue. Walmart has been great, thank you. Kevin, thank you. There's always unknowns, right? Politics, but at least main unknowns, at least the way stock market is reacting, the unknowns are kind of behind us, right? Because you have a sharp pullback in both VIX, and every day it's going to continue going lower and lower. So for now, the unknowns are kind of behind us. Mercado Libre had earnings. I know Bob has a large position, or his relative has a large position. It's a pretty sharp pullback in Mercado Libre. Okay, but thank you for sharing. Oh, hard to get up for morning bell, 5:30. Bob, we're gonna miss you. You're on West Coast, right? Wait, 5:30? Morning bell is at 8:30, 5:30, 3 hours different. No, 6:30, I mean. I don't know if there's any time. Are you outside of the United States? 5:30, that seems early. Now, actually, 4-hour difference. Information design for day trading specific. I'm not sure what to do with this information. I'm not a day trader. So let's go with how I use Active Trader. So yesterday, right, if you look at Active Trader from yesterday, we're actually trading that. So the question is, how do you use it? Well, there's different ways of using it. So we had NVIDIA, Tesla, and American Airline. So yesterday, I enter, in the morning, I waited 15 minutes, right? Usually I wait 15 minutes. Actually, I didn't finish 15 minutes, but close. And I bought the stock at $289, right? And I put half of my shares, I'm gonna get out at 294, half of it, it's 298. So the 2% move, well, I mean, for Tesla, it could be intraday, but, $10 move, right, in this case, or $9 move, usually takes a little bit longer. So the way I use these signals, for me, they're short term, but I usually, for volatile stock like Tesla, maybe 2%, maybe 4%. For less volatile stocks, I would maybe use for 1%. So sometimes I would exit the same day, but more often than not, I would have to wait till the next day. And this is how I use these signals, because they're meant to be short term. Some people are day traders, so they would be out the same day. In this case, obviously, Fed had a positive reaction to the Fed news, and even before the Fed, the stock just continued to rally. So that would be Tesla, right? That would be one example. There was other signals like BK that it was also Active Trader, but it took a while for me to exit the trade. It took a while. I thought I was actually want to be out of this trade, which I should get out of this trade. Okay, but I bought it on November 1st and closed it November 6th, right? So it took 5 days. So the Active Trader means to be short-term signals, but they allow you to diversify, right? Let's say you don't have any exposure to Magnificent Seven. We have NVIDIA signal. So maybe you want to enter NVIDIA, right? Assuming that this is a confirmed breakout, then maybe be long NVIDIA, and then maybe, or Tesla, right? And you hold it longer than 1 day. So these are signals. They're meant to be short term, and then it's up to you to decide how you want to use it. These are just like some of the strategies and guidelines of how you can use this. But, you could hold it for 1 day, you can hold it for 5 days. It just depends on, your style of trading, But these rules always applies to any style of trading, right? 4 positions at a time, 2.5% if you carry overnight. If you're doing day trading, I would risk less than 1%. So Brad, let me know if this is helpful. Andrei, Bob, Brad, Helen, Ian, Kevin, Mark, Pam, Peter, Raul, why? Any questions on Active Trader? All right, so if you're not sure how to use Active Trader, usually that means that, maybe you don't have like a trading plan in writing, right? Or you're executing a certain strategy all over and over again. Then there's 2 things I suggest: either one-on-one coaching, because everybody is different. We do have one-on-one coaching program you can register for, or coaching is time commitment, money commitment. So I get it, not everybody wants to do that. Then I would join our elite circle, right? This is a subscription, elite circle. It's a paid subscription, but it does give you 30-day money back guarantee. So there's no risk. You get 30 days of free education, basically. That's the worst case scenario. And then you can see all of my trades, right? Then you can basically participate in live trading room. We have morning bell, first hour of the trading session, last hour of the trading session. We have recordings. And then you can enter your phone number. You will get an SMS alerts. And you basically, I tried to do different types of trades. So Tesla was a stock, right? SH was inverse ETF. NVIDIA is a stock. Meta is an option spread, right? So I have examples of both, of option strategies, right? This is the spread that I exited. And I have example of the stock trade, right? And every trade gets recorded in terms of performance. Some of them are earning strategies, some of them stocks and options. So then I would join Elite Circle. In terms of tools, we went over Stock Forecast Toolbox. It gives you trend analysis, right? It gives you sectors, short-term, long-term trend analysis that's useful. We talked about research. Active trader, weekly trader, monthly trader, again, these are signals, right? It's up to you how do you want to use them. We suggest, weekly is meant to be held for a couple of weeks, right? So if Monday you bought a key financial, obviously we had a rally, so I didn't even look, but I assume key also rallied. Yeah, so that would be how you would use these signals, right? You buy them, the long-term signals get published on every Sunday, right? On Monday, you basically decide whether you want to enter this trade or not, right? Same thing, we give you different suggested prices, right? Either previous close or predicted low. And in the case of weekly trader, we're looking for 2.5% target gain stop loss. Any questions? All right, any other questions? Brad, thank you. Peter, thank you. Awesome lesson. Peter, if you got, if you think that these presentations are useful, then do me a favor. We try to get our Trustpilot score. We have a good score, but the more reviews, the better. So if you enjoyed this presentation, even just a 1 or 2 sentence like awesome, just please try to leave the review here on the Trustpilot. But we had some recent news. Oh, this is Yellow Tunnel, sorry. You can do it under Yellow Tunnel, or you can do it under trades. Either or you can do both, because we're managing both. Tradespoon weekly reviews, yeah, so 5 days ago. But if you can leave that review, that would be great. I appreciate it. Bob, does Keith have regular schedule? Yes, we try to do regular. Like today's an exception because he can make it. So sometimes our schedule, we have a conflict. But usually he's doing Tuesday close, Thursday close, Friday close, and Wednesday morning. So Tuesday, Thursday, Friday close, Wednesday morning. Today, he had a conflict, so we switched. If you have time to review research screen. Brad, sure. So seasonality, sorry, it's broken. We'll fix it. But this should show you seasonality chart. It doesn't right now because, a stock focus list, this is just some of the signals we recently generated. So it just shows you, if you need other ideas, Netflix, EOG, Meta, these are some of the recent trades. Probability calculator basically shows you, you can put any stocks and it tells you what our model says in terms of trend, right, for this week. Going into elections, we are bearish, model was bearish, and then gives you probability, 76% of the time by end of the year will be at between 585 and 606, right? And that's useful information because you want to know, and where the stock is heading. Any questions? All right, there's no other questions. You guys have been great. Thank you very much and have a great day. Bob, active trader picks for today. Yeah, so for today, active trader picks were, was this today? No, this was yesterday. Sorry, this was yesterday, November 8th. So Morgan Stanley is one. Capital One Financial is the other, and Fortinet is two. Bob, thank you. Brad, thank you. Peter, thank you. Please try to leave a review. If you positive, hopefully like the one that you just typed in the chat. Right? If you have negative, please send me email info or vlad@tradespoon.com. Will try to do everything I can to make sure that you get value out of these classes, out of these sessions. All right, thank you very much and have a great day.